For the first time in history, Bitcoin has just had the 100-week moving average cross below 200-week moving average. It's never happened in any of the market cycles. Is this a major tornado warning, or is this chart and this chart going to prove that it's a major fake out and a lot of people are about to be caught off guard? We're about to uncover it. Welcome in if you're new. My name is Steve. On this channel, we take no paid ads, no paid sponsorships. There are no paid affiliate links down below. It's just cold, hard facts that actually help you. Hit that subscribe button and let's jump into it. We're going to start our journey right here on the weekly chart, Bitcoin US dollar index. We've got a lot of information happening below, but we're going to start with what's happening above. What's happening above is we have three distinct moving averages on our chart, arguably the most important moving averages. We have the 50 MA, which is right here in green. We have the 100 weekly moving average, which is here in yellow. And we have the 200 week moving average, which is here in red. Now, what you'll notice are a few things. What you'll notice right away with this red line is that the 200-week moving average historically has been our support through the worst of times for Bitcoin. Case in point, bottom of the market, 2015, 200-week moving average holding support. 2019, bottom of the market, holding support on top of the 200-week moving average. Even the COVID crash, which seemingly caught everyone off guard, was holding support directly on the 200-week moving average. And it seemed like Bitcoin was forever going to hold support at the 200-week moving average. Why? Because it had been doing so for almost a decade. But we got to 2022, where we had the bottom of that market. It fell through the 200-week moving average for the first time ever. Now, as we've said, dating back to last year, 2023 was going to be the start of the bull run, but it's not going to be a normal bull run. It's going to be potentially the weakest bull run Bitcoin has ever had. Now, why is that? Well, each cycle has gotten weaker and weaker and weaker by a precise factor of 5.3. We were the ones to discover the 5.3 theory, which says if you take the percentage gain of any of the market cycles from the bottom of the market to the top and you divide that by 5.3, it equals the exact percentage gain from the bottom of the next market to the top of the next. In other words, it predicts the top of the next market cycle years before it happens. We've said all along, the Bitcoin market, this cycle that we're in now, will be the weakest. Now, when we said that, we also had a double top in the market and we fell below the 200-week moving average for the first time ever, which was our early warning sign of like, okay, this market cycle is going to be different. Now we have cold hard facts. But what's coming and what just happened, hot off the press, this yellow line, which is the 100-week, just crossed below the 200-week moving average. And if you look in the past, in 2015, we almost had this happen. And it almost happened here, which was precisely in phase 2 of the bull run. Phase 1 of the bull is you see the bottom of the market and you have a very large rally out of the bottom of the market, and then the market moves sideways for a couple hundred days. That's phase 1 of the bull. The phase 1 of the bull, its role is to build market structure directly on top of our resistance zone from the bottom of the market. Phase 2 is a different story. Phase 2 builds market structure directly on top of our resistance zone of phase 1. Picture it like stairs. We were in the first stair, and when you get to phase 2, you take a step up to the second stair. That second stair is built directly on top of the first stair. This is phase 1 of the bull and phase 2 of the bull in its purest form. Now, as we get to 2019, the exact same thing happened. We had the bottom of the market. We had the large rally off of the bottom of the market, which brought Bitcoin into phase 1 of the bull. Phase 1 of the bull actually had us retest our base, which is a curveball to most people, but we had not seen a double bottom yet. In every single market cycle, we see a double bottom. So 2019, we didn't have a double bottom yet until here, which was our true double bottom. That's when we moved into phase 2 of the bull. But things get interesting here because we have this cross. So is this a major tornado warning? We've already gone below the 200 week. We had this cross for the first time ever. Or is this going to be a major fake out? Let's look at our next chart. Our next chart has a lot of clues. What we have is this trend line that's more than 10 years old. This trend line, which is our yellow line, is what is correlating with our blue line, which is price. Our price is on the monthly chart, and we happen to be on our line chart. Now keep in mind, when you go to the line chart, it's the closing price. So it's a bit cleaner. There's a lot less noise for how high did we go that month, how low did we go that month. It just talks about where did we close. And when you look at where we close, you can see where we are now. And if you can see where we are now, we have a distinct advantage. We have a distinct advantage because we understand markets and we understand market moves. Let's break it down. Our yellow line is here. We started as resistance. We started holding as support in 2014, but we broke through. We broke through finally in 2017 after a whole bunch of years of resistance. When we broke through, we reached our cycle high. When we reached our cycle high, we crashed down. Crashed down to where? We crashed down to where our support zone is. Anytime you have resistance and you break it, it turns into support. It's that simple on any time frame, on any chart in human history. We hold support here. We have this failed rally. We move into phase one. We have this COVID crash, which surprises everybody, but not really. We fell right down to where we were supposed to. We fell exactly down to our support. It was still our support, and that is what propelled us to our next all-time high. When we reached our next all-time high, we crashed down. Everybody was freaking out. But we crashed down to where? We crashed down to precisely our support. Surprise, surprise. The markets like to surprise everybody, as everybody says, right? No, it doesn't work like that. Markets move in precise movements with support and resistance. We fell exactly down to our support. We bounced up and we fell through. So our support became our resistance. And we're in this situation similar to that 2014 to 2017 area, where that was the only time we had held this line as resistance. We're in it now. And case in point, back here, March 2023, had a large rally. Everybody gets super excited, but we broke our support. When we break our support, it becomes resistance. It's very simple. So we have a resistance here. But what is right in front of us is a really good sign. What is right in front of us is this is our new pivot high that's going to be official. Now, we have our previous pivot high here. We have a higher high here. However, we followed that higher high up with this was our low, this was our another lower low. So we are in this midst of a cycle where we had a high and a higher high, which is great, but we had a low and a lower low, which is really not good, right? This tells us that we were in a downtrend and we had to get higher than this pivot high. That's the only thing we needed the market to do. Why? Because back here in 2019, we retested our base. However, when we retested our base, we had a high here, we had a low here, we had a lower low, and we failed to make a higher high, which means we were in a downtrend, right? If this was a higher high up here, we would have never retested the base. It's just simple. We were in this downtrend for months and months and months, which is why we retested our base. And by the way, we rallied up to here, which was still not a higher high. And we had been resistance in October 2019 and January 2020 and also in May 2020. Keep in mind, this chart is the line chart, which is the closing price, which is super clean. It's not until we broke above here that Bitcoin really went into a parabolic stage, phase 2 of the bull. Now, when you look at it, where we are today, and you study what's happening today, are we like 2019 where we failed to make a higher high and we continued in a downtrend? Or are we like similar to 2015? 2015, this was phase 1 of the bull. This is when we moved sideways for a couple hundred days. How many days, you ask? 196. Which happens to be the exact number that we did in present day. Look no further than the facts. You can see we moved sideways for 196 days precisely in phase 1 of the bull, from here to here. After 196 days, we broke through. Where is that more similar to? Is that more similar to the 500 days that we moved sideways here? Or is it more similar to precisely the 196 days that we moved from here? Keep in mind, this was precisely 196 days and then a breakthrough. What did we do today? 196 days and a breakthrough. Now, when we look back at where I just asked you, are we more similar to here? This was the 196 days. This was the higher high. This was the first higher high. We had a high, we had a low, we had a failed rally here. We made a higher low, and then we broke into our first higher high here in phase 2 of the bull. So we failed to make a higher high here, which we retested our base. We did make a higher high here, which moves us into phase 2 of the bull, and we are making a higher high here. So this is really good news for Bitcoin. So would it null and void this turmoil that could be potentially a tornado warning, or is this tornado warning going to be a fake out? If we look a little bit further and we look at a really simplified chart and we understand the movements of these cycles, the keys are right in front of us. What we see happening with Bitcoin is that this is phase 1 of 12, this is phase 1 of 16, this is phase 1 of 19, and this is phase 1 of 23. When we look at this, we understand this red line. Below it is our base. 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 These are the bottoms of the market. When we move and we create our market structure, we create our base. Phase 1 builds directly on top of our resistance. Phase 1 builds directly on top of our resistance. Phase 1 builds directly on top of our resistance. And phase 1 builds directly on top of our resistance. These are all good things. Every cycle is the same. Phase 2 just builds directly on top of the resistance from phase 1. It's that simple, right? And where we are present day, keep in mind, this is the 2-week chart. So this candle will close on Sunday, 11:59 UTC time, and we will see where Bitcoin is. But we have yet to hold support on top of our resistance zone. Keep in mind, phase 2 holds support on top of our resistance zone, but we need the candles to confirm. So we're in this situation where there could be some red flags. There could be this tornado warning brewing where we fell below the 200-week moving average and we had this cross for the first time ever. Or it may be a sign of like, hey, this is really going to be a weak cycle. We got to wake up and smell the coffee. 100K may not be realistic for this cycle. We have to accept the cards that are dealt to us and accept the facts in the charts. We have facts that say we're in a good position, right? We're making higher high, just like we did in 2015, 2016. We're not similar to 2019 in this chart with these facts that are literally right in front of us. However, we do have this resistance zone that is still resistance. And if you fast forward a couple months, I mean, we're talking about, 44K, 42K, even in January 2024, 46K. This is our resistance zone, again, for the closing price, not the high, not the low, the close. So we have this resistance zone. In 2014, we stayed below here for roughly 800 days. So far, we've been below here almost 500 days. Okay, so if we're similar to here, we still have some room to go. And this will project out, and we can even project it out to May 2024 of being roughly 55K resistance zone. So we've got a little bit of time. It may not be the tornado warning that everybody is thinking, but again, if you go back to our true rule that we made for this cycle, anytime you close below the red line, you have to be worried about the next handful of months of a potential surprise drop in Bitcoin. It could be 20%, 30%, 40%, and even up to 50% drop, which would surprise everybody, but the foreshadowing is already in the facts in the charts. Hit that subscribe button, put a thumbs up on this video, share this video, and I'll see you right back here in the next video. Peace and love to the fellow underdogs. Do you want less stress and more success in crypto? Click this video right now.